Hey traders, I trust you are all well and welcome to this show. Well, today is dramatically interesting. I say that because of the BOJ, Bank of Japan, and the interest rate announcement. I will show you what I mean shortly, but let's just have a look at a couple of trades that I took earlier on, and I can talk you through the logic and the thinking of them here. Hang Seng 50. So I was up having a look at the markets. Pretty interested to see how the market will respond to Bank of Japan. But also, I get up and trade up to 6 a.m. my time, which is midday, Singapore, Hong Kong. So I look for opportunities then. And these are the currencies, the markets I was looking at that I use for this particular exercise: Euro, New Zealand, Euro, Yen, Nikkei 225, Hang Seng 50 was Yen, Pound. So first candle of the day, all of this stuff is pre-market, depending on what your broker shows. So the market opens here, 9:30. And first candle, good candle for the bulls, closing above the high of yesterday, this light green mark. And when I see that breakout, I'm always expecting to see a follow through, and the market just keep going up to the stratosphere. But sometimes it doesn't, like happened now. Still we had a follow through candle, minimum the bulls could do. Then we had the pullback. And this is basically a breakout pullback high one structure or setup. Essentially, the market is broken up, pullback, and the bulls are resuming. So having seen that breakout, you expect the market to at least get to a measured move. And, you don't know what's going to happen. Doesn't mean it's going to get there. And also doesn't mean that if it gets there, it's going to stop. But, a measured move is a pretty mathematically high probability event to take place. So I took the trade just here, and we got to the measured move. And of course, not I expected, after we got above it, because usually we just bounce and come off. I'll show you another example just now. I thought, there could be a little bit more. The market might continue to go up. But then we failed. And as we started to fail after the measured move, high probabilities that the market will probably just go sideways and then come down. So at that point, I had pulled my stop down, pulled my stop up, pulled my stop up to that level, and I got stopped out right there. Then, I thought, well, we're going to go sideways, and I have now a new high, and the market is pulling back. So that becomes a level of resistance. So I wasn't keen to jump into any setup here. Because of that, I thought, no, we might fail, but we did not fail. So market went up a little bit further. So looking back to the left, I still wouldn't have taken any of these trades just because of the structure of it. Had this probably been a little bit stronger, I would have said, I probably would have taken a lower probability trade. Lower probability, because at least, you got to try and get to 1-to-1. But I didn't take that, so that is fine. I had gotten out, banked a little bit of profit. Then the market created this little trading range, went above it, came back, and here is where the market closes, the morning session closes. So I was gone at 6, just left it. But had you stayed in the market and came back and seen this, you would have taken that if you wanted to take that, but your stop would have to be down here. You always put your stop at the bottom of the trading range, just like if you wanted to take this one, you have to put your stop down here. So, if you took that with your stop there, you're expecting at least to get to a measured move. And, the market reacted to that. So you'd have probably, if you trailed your stop, you'd have gotten out there. If not, just hold on until later on. So I was out and I came back here at the open of the UK markets. And it's done. So just waiting, nothing for me to jump in at the moment. Just check. Excellent, excellent. Sweet took that trade. Fantastic. Excellent. Let's took it roughly 17,735. Oh, okay. Stayed all the way through. Oh, brilliant. Well done for sitting there and watching. That's absolutely good. That's a brilliant one. That's a 3-1. When I'm gone, I close my trades. I don't stay in there. But if you stayed in there, absolutely brilliant. Then another trade that I took. Look at this drama with Nikkei. So, I got away from the market around here. So when we had the thing with the BOJ, and that's how they do it. They don't give you a specific time. I mean, if you look at Forex Factory, for any news announcement, they tell you, that there's no specific time. So you don't know when the news announcement is going to come. So you just got to stay alert with whatever you do. So had you been in this market and whatever you would have done here, I think this would have caused you a few problems. But in any case, so 6 my time, midday, Hang Seng, I was leaving. But if you are watching this and, if you're still going to be in, like Sui was, so I don't know if this was on your watch list, this would have been a fantastic one to trade. And this is how you would have looked at taking the opportunity. So when you see a trend candle, okay, so there is tails, but the body is bigger than the tails. Measured move is here. I start off by using the body, and we go to it and we pull back. Now, when you get to the pullback, you think, oh, it's going to fail, which it can because you don't know what's going to happen. But there's a few things to bear in mind here. We've just gone above the high of yesterday, and there is a high of the news candle, and the market has come back, tried to break beneath it, and failed. So it's not a classic breakout pullback by one in one of the stories that we trade. But in here, you would have probably thought, maybe let me jump into the market above this candle, or wait until you start to get above here, which have been fantastic. Your stop is still down here. Okay. Your stop is still down. Your stop's got to be in the right place always. But as soon as we start to get acceleration up, pull it up and try and get to break even. Now, you'd have been rewarded, but then there's another problem. There's another news announcement that came here. It was listed that there would be a statement. You don't know when it's going to be. I mean, like when they have American news like 30 minutes later, so you're prepped for it. So you just don't know what the market is going to do. It was a small candle, but the market accelerated up. So had you been in the market, if you wanted to take that, the news candle, I don't trade. And how do I know that's news candles? When I went back and looked at Forex Factory and said, goodness, where did this come from? And they had an announcement exactly there. That's how it works. But if you're going to take this, you're going to put your stop in the correct place or wait for the pullback. And then this happened. Now, I have absolutely no idea. I went and checked on Forex Factory whether there was anything that's affecting the yen. I mean, there was orange news for the Swiss. There's no way that this goes, but something dramatic happened with all the yen currencies. And that's just the thing about when you have news announcements and you're not specifically told when things are going to happen. You have to be ultra cautious. You're going to move you stop up pretty aggressively, because if you hadn't done so, if you're holding your stop anyway, I mean, that happened so quickly and so dramatically. Because I came into the market around here and I was saying, this is pretty interesting, bullish. I wonder if we're going to have an opportunity for the market to accelerate up again. And then, boom, it just collapsed completely. It's a news announcement, just changed the whole structure of the market. And then before you knew it, it pulled back all the way. So what I found interesting is when I put the measured move in, which I have shown you guys how to do it. So just take my feedback on it nicely marked. I look at the body first. And I thought, oh, that's interesting. And when you look at the body, it's like, I mean, this whole news candle, bearish completely. And then the bulls came and just erased half of it. So the bear strength that was there was half of it was erased. So then it became a pretty balanced market, which can lead to a trading range. Why balanced? Because big bear candle, half of it, you know, erased by the bulls. And the bulls, went up and failed to break out above that breakout, and they failed. And when the market came down here, I thought, okay, this is a failed breakout by the bulls above the high. So the bears are defending their position. So now with a micro double top, we have a failed breakout above the high of that particular high of the session so far, high of this candle. Good bear breakout, and I thought fantastic breakout, put that low one. I'm going to sell here, and let's see how far the bears will go. The first port of call for them is try and get to the measured move, and if they're strong, they're going to try and test and get down here. Of course, when you take a trade, you structure it properly and hope for the best, but you don't ignore the structures. One of the structures I look for is a measured move. So there was a measured move. We got exactly to the measured move, and I was, come on, bears, just smash off. But of course, no one listens to me. And we failed. So as soon as we failed, I realized that, bears have reached the minimum they could do. So I got out, little break even, and then we adjust in a tight trading range. So just before we go, another market that's just like, oh my goodness, what is taking place? Probably just educational for me. Nikkei 225, there was that news announcement, immediately failed, followed through by the bulls, and we got exactly to the measured move. And then they came back, and then we just went sideways. Pretty difficult to jump into any of this structure. And then we had that whole surprise element that took place. I say surprise because it wasn't scheduled, but unless I missed something. And then we are back again within the trading range. Pretty hard to trade if you're looking for swing trades, which is what I do. Try and get trades that at least you hold on to, to get 2, 3 more to 1, whatever it is that you may get. But in any case, so the yen pairs are pretty interesting. What I'm going to be doing, is still got a few hours of Friday. It's just after 1 p.m., just close to 1 p.m. Yeah, quarter to 1. So I've got a bit more time. Just wait patiently and see if anything else sets up for me to jump in. All right, guys, let me check if there are any questions and comments. All right, so yes, watch the yen pairs and see if you get another opportunity. But otherwise, that's it. You're going to take your trades. You don't know what's going to happen, and manage them. That's the key thing, probably. The lesson from today, from the trades that I showed you, if you're getting out early, manage your trades. If you're staying, like we did, maximize it. If it hits a target and it's failed, get out. There is no point sitting and hoping and ending up getting stopped up. All right. Take care. Have a great weekend. Marlon, thank you, boss. Sincerely appreciate it. Take care, everybody. See you next week. Bye-bye.